All right, welcome back. Bitcoin's price is a little bit depressing, but it's definitely pretty easy to understand what's going on in the charts right now if you um, understand technical analysis. So let's see, make sure we're streaming. All right, we're live. Okay, so check this out. It's actually really simple what's going on right now. So obviously, we know we had the price dump. There was a bunch of leveraged longs and some negative news. Ended up crashing the price. Whale ended up selling, which we already know why this happened right here, this cascading long effect. Right now, what we have in technical analysis, this is called consolidation, but I've been looking at this consolidation for quite a bit of time, and there's a lot of things that people are calling it in the space, and it just makes it more confusing than it needs to be. You get falling wedges, rising wedges, all sorts of consolidation triangles, and it just makes it way more confusing than what it needs to be. And I'm not being negligent and simplifying it to the point where it doesn't need to be simplified. This is all you really need to know with this consolidation pattern. This consolidation pattern is setting highs, lower highs. So it's clearly a downtrend. And just so you can see what I'm seeing. Let's see. You just simplify this. Let me make the price of Bitcoin very simple. It's very simple. Basically, it looks like this. I told you guys it was going to be simple. It's literally that simple. And the fact that when I look at this consolidation pattern, it doesn't line up with a lot of different touch points, especially on the bottom end. This is really the best way to look at it, is you essentially just have this downtrend. And so now, what do we need to take away from this downtrend? Because there's quite a bit to take away. So the 4-hour time frame is not a very good time frame to be looking at the EMA ribbons, which a lot of people bring up, but a lot of people don't bring them up on the 4-hour for good reason. It can show temporary resistance points, but the fact that it continuously breaks above and goes below them, not a very good time frame. Really, the reason I have the 4-hour pulled up is because when finding bottoms or when finding overextensions, the Bollinger Bands on the 4-hour seem to be a very good time frame to understand when we're going to be potentially moving up. You see, bottom, we move up, bottom, we move up, bottom, we move up, overextended, and we move up. So I do like, as a technical tool for figuring out where we're most likely going to be bottoming and correcting, I like the 4-hour Bollinger Bands a lot. Going over the daily chart. The daily chart is incredible right now. This is really what we're looking at, is this downtrend. So this downtrend that we had going on back here, we have the same thing going on right here, except we need to correct even more for us to even interact with these EMAs, exponential moving averages. You see right here, it hits the top of it, hits the top of it, hits the top of it, and comes down. We want to see something similar to figure out, okay, the bottom seems to be right here, where we constantly find this band as support. So usually the price will come down. We could expect price to come down to maybe 43,400, and then potentially heading back up maybe to around that $50,000 to $51,000 level, but we haven't even interacted with that yet. So really what I'm looking at is this little fractal idea of constantly coming up, coming down lower, coming up, coming down lower. Constantly we're getting bounces, but constantly setting lower highs. That's really what's going on here, and until proven otherwise, that's really what we have to look at right now. And so we go 4-hour. again, I wouldn't look at the EMAs on the 4-hour. The daily is a really good place for a long-term reversal, so I'm going to take those out. But what you can see is that we have a bunch of touch points on these candlestick closes. So the first sign of a reversal would be if we were to break above this trend line right here, because this trend line is clearly perfect. You have 1, 2, 3, 4, 5 touches, and TA you only need 3 touches. So this is a very strong trend line we got going on here. So if we could see, it's a measure right there, probably take about that many candlesticks to get up, about 48,700, then that would be a really good sign to start a reversal. And then what we'd want to see is, so break of this trend line, and then if we could rise, like if we could hold above that, then what we would want to see is a candlestick close above this candlestick close. So that would be 49,220, because if we see that, then we could potentially be looking at a double bottom pattern playing out, which would be definitely enough juice to get us out of this downtrend. But what you have to understand, and what I'm about to get to, probably the most important parts of the video, are that, let's see, MACD is bearish on all major time frames, so definitely keep that into consideration. The fact that although these are the circumstances that would take to get out of the downtrend, we are still very much in a downtrend, as you can visually see right there. Very bad downtrend on the 4-hour. Daily has a downtrend too. You see this red right here, not good. That means separation of the divergent, whatever you call them, moving average, divergence, these signal lines. See it again right here on the weekly. So all the major time frames are showing a downtrend on the MACD, which is huge, not good. So definitely do not bet against the trend right now. The trend is definitely down for the short term. So really what you'd expect from this little TA that we have figured out so far is that we're most likely going to continue to go down until we start to reverse and we start to be creating higher highs. The problem is we haven't created a single higher high. When you look at this, it's here's a high and then this one's lower, and it's like, oh, we're gonna come up, and oh, we can't make another lower high. We just keep going down. And so I mean, 49,300 area, if we can close a candlestick, that would be huge, to start to see a reversal. Last thing I want to talk about is what, besides different levels, what indicators can we look at to see a reversal? Because that's probably a really good question. So stochastic, specifically what I'm looking at on the stochastic is, you see a lot of these on the 4-hour. You see a lot of bearish and bullish, so signal flips on the 4-hour. That's why I would not recommend going to the 4-hour. What I would recommend is the daily chart, and you can see very clearly on the daily that, let's see a trend reversal right here, see trend reversal right here, and there are some pretty massive pumps right here, and also it corrected out of this oversold area. So potentially it would be bearish if we came up here and then corrected down, because see if we can find an example of that. Yeah, right here. This little price action right here, but this is on the daily, so it's relatively decent. But so that's what I'm looking at, is the stochastic on the daily. And was I looking at the weekly? Let me see what the weekly looked like. Oh yeah, the weekly, the only thing about the weekly is it's like, is it gonna, so the higher the time frame, the longer it takes for for one of these oscillators to move. Yeah, I mean, if this blue line was able to cross above this orange line, that'd be really good. It takes a while to do that though. So that's why I was looking at the daily, is because, oh, and then the last thing is the MACD. So, or not the MACD, the RSI. Let's see, RSI. So I would be looking at the stochastic on the daily. That's a really good indicator for like trading short term, and we're looking for like a little price reversal. So it plays into what we're looking at. All right, so you actually do have bullish RSI divergence on the daily, so a little bit of hopium if potentially the RSI can hold. It doesn't look like it's going to be able to, but you have the price action constantly setting lower lows, which is not good. So what's basically the only way to reverse out of that is bullish divergence on the RSI. So right now the RSI is setting higher lows, so the RSI is trending upwards while the price action is trending downwards. That's showing pent up buying momentum and strength in the market. Let's see if we can, boom, is that right? Let's see. Yeah, tight. Alright, so yeah, it's constantly setting lower lows on the PA, which is price action, and the oscillator is constantly setting lower highs. And so this is actually really bullish if it can hold. What I'm concerned about is that if we continue to trend downwards to this 33.60 level on the RSI, then we wouldn't be setting higher lows anymore, and that would negate the bullish RSI divergence. So if there is a correction, that's fine. If we continue to go down, which it looks like we are, there's no real reason why we shouldn't continue to go down to around that $43,500 range over time. I mean, you just look, and this is clearly the picture that's being drawn. The only way to negate that is if we can hold bullish RSI divergence. Daily chart's about to close, which is huge. It's in a pretty decent spot right now. But that's what I'm looking at, is the two things on the oscillator side is the stochastic on the daily, and I'm also looking at the RSI on the daily and looking at bullish RSI divergence. RSI divergence, yeah. So that's what I'm looking at right now in the charts. It's pretty simple. As long as we are continuing in this downtrend, I would not be I would be looking for more low price action or more consolidation. As soon as we break above it, I think we're definitely going to move higher if we break above it. But you got that level, you got those levels that I talked about earlier. It's really that simple. Till we break those levels, it's bearish. And then those stochastics, they could be an early warning sign for a reversal if that's what you're looking for. So yeah.